Alrighty, weekly recap. Let's pop on over to dollar. Alrighty, so we finally broke out of the inside candle range on the weekly, right? Like inside from this, inside from that, bang, broke out bullish. Yeah, so essentially what I was looking for in this weekly candle, right? Like I was looking for us to break out, and I had the expectation that we'd most likely be bullish when we do that, and we get that move higher into these weekly highs, kind of respecting this weekly order block here. Zooming into the daily chart, we can see that that daily bullish fair value gap I had outlined going into the week ended up holding after we kind of dug into it a bit and kind of consolidated Monday, Tuesday inside of there. Then Wednesday, Thursday, Friday, we got a nice move higher out of that daily gap, probably reaching up into here when the time comes. Anyway, with that, we had bearish price action in euro, right? It isn't like as bearish as dollar was bullish, but it's still bearish. And then we had very bearish price action in pound, and pound has actually hit those equal lows that also lie here with that monthly fair value gap that I have been looking for basically since, I think, essentially like here. So called this level 40 days ago. It did take us 40 days to travel. A lot of consolidation in between, but we did end up reaching down into that, so that was a very nice played out very nicely from that expectation. And then looking at the daily chart, now we can see that really last week all we did was kind of consolidate Monday and then sold off pretty substantially, right? Also leaving this new daily gap down here. I'm just going to move this one down. And we also have a second daily gap right here then as well, for potential moves in the future. Anyway, so majors were bearish in line with that bullish dollar expectation. So far so good for the week. Now obviously these weren't any like actionable moves. There was no valid key level like dollar has one, but obviously I can't trade on dollar, so I'm looking to trade EU or GU, and in both of them we did not have a key level valid for a swing trade with my model. But yeah, the move was as expected nonetheless. Let's move on to indices. Now on indices, I'd say, yeah, this kind of sums up the week pretty nicely. These weekly candles, it was more of a consolidation week than anything else. What can we say about the week in general? The week started with a big gap up and then 3 bullish days, and then Thursday, Friday kind of were retracement. Now on that retracement on Thursday, we did drop down into this daily gap on NQ, but we stayed above the opening from Monday, right? Like the week's open or the week's low, I guess, because there was a little bit of a wick there. And on ES we made a new low, right? We went below this candle, while in Q we stayed above. So we had daily SMT, we had a daily key level. From there we obviously dropped down to the hourly chart. Then we had a close here at 4 p.m. on Thursday, which was like a few companies having their earnings releases, right? Pumped up real nice. We were from that daily gap, we had the daily SMT basically from down here where we see that gap higher, and we had the displacement and limits got set. We kind of consolidated, then we dropped down and filled that limit, and a really nice initial reaction, right? Like on this 10 a.m. candle. It had my hopes up for sure that we were just gonna blast through this bearish gap here and then run higher, but we did end up just slightly wicking into that gap and then getting bearish price action from there. And then on Friday in the end in New York, we almost recovered all the way back into there, but pretty bearish signatures in price, right? We respect that hourly order block on that wick higher, and then if we draw out the hourly gap here, we can see that we also close below consequent encroachment of that, even though we ran all the way up to here. So that's how we close the week. Obviously this trade is still open then, but yeah, not looking not looking too good. And then we had gold, and the thought for gold this week was either we push higher off this daily gap down here and this hourly order block, right? We see a move from there. That didn't happen. We ended up digging down deeper. Where did we dig down to? This lower weekly bearish bullish for value gap here on gold. We tapped into that, and silver tapped into this. Now, as you can see, silver is below the week of Monday, September 29th. And here's Monday, September 29th on gold, and we can see that SMT right there on the weekly time frame. So we have our weekly key level, we have high time frame SMT. From there, what do we see? We see these two down close candles, bullish order block on that run down into the weekly bullish for value gap that we just had marked out there. No, in theory, yeah, it's actually here. Just to correct that a bit. And then from there we closed above, trade triggered, so to speak. And from there we've kind of been consolidating on gold. Now silver looks a bit more bullish than gold does at the moment. Gold also has a bearish daily gap here, but there's no valid setup from there. So at least so far. But yeah, that is very much what we're looking at on gold right now, or what we're looking like on gold, so to speak. I mean, yeah, that sums up the markets we're looking at, right? So peace out, Girl Scout.